In today's interest rate markets, let's take a look at the 10-year note futures as they're experiencing some further selling pressure today. 10-year note futures lower for a fourth consecutive session. Today's price action has the futures market pushing back down towards that 110 handle, 110.07 currently, so holding just above it. And that corresponds with the lowest levels from the end of February, which also correspond with the lowest levels for the year. And when you look at some of the driving factors today, really the primary drivers appear to be U.S. data points continuing to roll out this week, inflation data being one of the primary drivers. U.S. PPI data today, hotter than anticipated, both in the core and the headline number, following up the increase in the core number a couple days ago on the CPI data. Couple that with retail sales coming in stronger than anticipated, and we have a shifting dynamic as far as the Fed expectations, and that's impacting the Treasury markets today. So with today's data, the markets are now pricing in a little bit lower probability of a cut in June, and we're also seeing a pretty heavy selling pressure across the entire curve. Looking at the yields today, 10-year yield up 11 basis points to 429 basis points, so pushing, as I pointed out, back towards the top end of the range for the year, which is just over the 430 basis point level. So we're continuing to see yields moving higher throughout this week. The yield curve moving higher as well, a little less inverted today as the middle to the back end of the curve sells off more so than the front end of the curve. Really, it starts at the twos, but with the heavy selling is from the threes all the way out to the 30s today, where we're seeing increases from 9 to 11 to 12 basis points, depending on where you are in the curve in the middle to the back end. So heavy selling pressure in response to the data points this morning from the U.S., and that's pushing the 10-year futures back down towards the 2024 lows.